Earlier this week, I made mention of a term called stop loss orders. What that is it is a selling order that you can put into your brokerage account to say that if the stock that I own or any individual stocks that I own, and let's use the example of Tesla, I currently have about a 25, 28% profit in Tesla. And today I had to take my grandson back to Atlanta. So I was in my car for about 6 hours going back and forth and stopping for lunch and all. So I didn't have access to what was happening on the stock market. So what I did was for that and for Google and for Apple, a number of stocks where I've got some substantial gains in, I went in and put a stop loss order. And basically it says if this stock should drop by either a dollar amount or a percentage, that I want you to sell it. Now, there's some ramifications you've got to consider here. You want to do this through your brokerage account, and you want to make sure that your brokerage account is doing it, that they're holding that order in-house as opposed to sending it to the NASDAQ or the New York Stock Exchange. Because if they send it forward, it's available for anybody to see. So a computer that is doing computerized training can see that you have entered an order to sell, let's say, 500 shares of Apple if it should drop below a 5% window. And the computer could see that. And then if they own enough Apple, they can pretty much, and when there is light trading, they can manipulate that down to activate your stop loss order. Does this happen? Yeah, it does. There with E-Trade, I have the advantage that they hold that stop loss order at E-Trade until it is triggered by the passage of my sale price. That way, computer trading cannot take advantage of it. But what you learn is that computer trading learns where the 5% is. That's what I normally put in. I was asked recently, do you use 5 or 10%? I would hate to lose 10%. So no, I use a 5%. And that protects my profits. And I think that's important that you know how to do that. Is it likely that this will happen? I think you would normally say, no, that's not likely it would happen. But just go back to last March and pull up some of the airline stocks and Boeing and some of the restaurant stocks and some of the hotel stocks and the oil stocks. And you saw 25% drops in a day. So if you were misfortunate enough to hold those stocks and you had substantial profits in them and you were away for a day or two, you might have lost everything you had. But if you'd had a stop loss in there, it would have triggered you out, most likely at the price you put in, unless it just drops like a cliff and it goes past your loss, then you get the next sale. Okay, so let's say I put in a stop loss for Apple at 100 or 215, and for some reason it drops below 215, and the next trade is 210. Well, that's what I'll get. So that's how a stop loss works. I think it's important that you know this because I think it's important because I think you're going to make a lot of money and you need to know how to protect those profits. I'm going to, I've copied the description from E-Trade within their framework as to how they describe it. And it describes it much better than I can because it goes into great detail. And I'm going to put that on both tomorrow, Friday's morning plan. And then for those of you who see this video a bit later and want to subscribe to that morning plan, I'll put it out on Monday as well. And to subscribe to my morning plan email, just go to bestofusinvestors.com and enter your name, and that'll put you into my email package, and I'll send it to you. And there's no cost for it. So, but I think this is something you need to know, particularly if you want to continue to trade. There are other ways. As I say, I use the 5% way. You can put in a dollar amount. You can also put it in so that it is good for a day only. If you're normally watching the market every day, or you can put it in for 60 days, or at E-Trade, I can actually enter a date that it initiates it up to. So let me take you now to my E-Trade account and show you exactly how I entered this and give you a little bit of better understanding. Okay, what I'm going to show you here is how I would set up a stop loss order in my IRA account for Tesla. And let's say I wanted to put for 30 shares, and I want to put a sell order in, and I select the type, and I'm going to say a trailing stop percentage-wise. So I put that percentage, and then I put the value of the stop, 5%. So what that basically says is that Tesla is currently selling for $998.91. So if I put in a 5% stop loss order, if it hits $948.96, it will stop me out and trade my stock. That protects me. Just like today, I have to drive to drop my son off in Atlanta, so I'm going to be away from my desk for several hours, and if for some reason Tesla dropped more than, or dropped 5%, E-Trade would submit that order to the NASDAQ trading, and I would be sold out, and thus protecting my profits. I currently have about a 25% gain. That would take my gain down to about 20%, but I wouldn't have to suffer any more loss. Of course, I could then come back at some later time and buy back in, but this is for my protection. Now, the other thing that's here, it says for the duration. If I then got home and didn't want that in place, I would let it expire at the end of the evening, or I'd come in and remove it. Or you can say good for 60 days, or you could say good until date, in which case then I could enter a date here, and it would stay in place until, at this point, September the 19th. So that's how a stop loss works. Now, what I don't know is if this is available on all brokerage accounts, particularly some of these new ones like Robinhood. I don't know if you can do this. If you can't, I'd suggest you change brokerages. And I know a lot of you young people are using Robinhood. I don't know a lot about it. I know you can trade fractional shares, and I read something this morning that there is a heavy usage in Robinhood for this, people buying stock in Hertz, a company that has filed bankruptcy, and the last people who get paid in a bankruptcy are the common stockholders. So that just informs me that there's a lot of people, young people who are trading, who don't really understand. I hope that's clear to you, and I hope that makes sense. If you have any questions about it, feel free to ask questions in the comments, and I'll get to them as best I can. I'm seeing a lot of helpful comments where what I want to happen on this channel is happening, where people are expressing their opinions. And in many cases, they're contrary to my opinion. And please, you aren't going to hurt my feelings. I recognize that there are some of you out there who know more than I do about certain segments of the market, and I hope that I know more than some of you about other segments of the market. But I want this to be a learning place. I want it to be a place where you can learn how to trade stocks, and then like this, and protect your profits. And so please feed your comments. I'm going to try to find somewhere down the line on bestofusinvestors.com kind of a thread or whatever you call it, where questions can be asked and answers given, and it runs kind of independent of me. But that's down the road. I'm just building this thing, and I'm trying to figure out how it works best. I want to thank you for subscribing. We're getting new subscribers at the rate of about 200 a day right now, which is just phenomenal. Our viewership views are going up extremely fast. So thank you for your support. I'd ask you to share it. I'd ask you to subscribe and hit the like button. I don't want to do, like you all know, smash that like button. No, we're not playing a comedy scene. And let's just work together on this. Thank you.